else to do, man. People start popping in here, and I'll shut it down again. So we'll try one more time again, man. If the sound doesn't work again, just give me a thumbs up for the first person that pops into the group here. You kidding me? It's working now? Wow. All right. So we're back, guys. I do apologize for that. I don't know what the problem was. So for you guys that can make your way back into the group, I just had to do a restart and do the get it going again. So I do apologize for that. So if you guys can actually hear me, that's awesome. So awesome. Good. Working. Tuned in again, 10 by 10. I love it. Good. So you guys can make your way back in here. I do apologize, 13 minutes, but I do this every week. So I think it's pretty cool for you guys that do make your way into this live stream. I'll obviously delete the old one. No big deal. No harm, no foul. I could probably talk an extra hour tonight anyway. But like I was saying in the older live stream, I haven't really been doing a lot in the stock market other than just kind of monitoring the action a little bit. I think this might be a little bit of a calm before the storm, before seasonality kicks in. I really don't know what you guys are looking to do in your portfolios now. I would recommend kind of holding true until the end of the year. So I said I added my first share of Amazon. All right. Owning shares of Amazon is like riding a roller coaster, no doubt about it. So certainly want to let some people get back into the group. Hopefully they retune in and they don't drop the channel. I'd like to get to 10,000 subscribers before I go back to 8,000 subscribers again. So now that I was just commenting when you guys were trying to read my lips on the last live stream, I was just talking about how pleased I am with the growth of the channel. And one thing that I'm going to do, I'm anticipating or forecasting probably getting to around 10,000 subscribers. I'm certainly trying to build the channel as responsibly as I can. I do owe some people some very, very big thanks along the way for helping me in build the message. Certainly they believed in me a long, long time ago. But for any of you guys who have made your way into the independent investor channel within, the first 10,000 subscribers, I've met some cool people. And a lot of the reason why I do these live streams is really just to provide some transparency on, who the creator of the videos are. And, I think it helps. I think it helps foster a discussion about finances. Certainly there's a lot of people with a lot of different perspectives, money and portfolios and investing and things like that really typically derive a lot of different conversations across the board. And I think for a lot of people, if you can get your program solid in a few things, a few approaches that I think you have to do correctly, I think from there on in, it's really just educating yourself and evolving as an investor. And I think this dialogue really helps. I try to tailor the topics that I put through the channel really to help and aim for different demographics. This week I'll be releasing a video investing for 18 to 24-year-olds. It's actually a favor for someone that I specifically know who asked me, look, my son is interested in some information. Can you put something out for him? And I said, absolutely. So I threw that down for him as well. I'm going to let some of these guys get back into the group. I don't know if I alienated half of the group. So I've got all the loyal independent investor subscribers in here, and all the name callers haven't made their way back into the group. Now, I'm just kidding. That was totally my bad. But no harm, no foul. That's okay. We'll live to fight another day. But I certainly want to welcome some of the folks, man. I mean, I have maybe become a better you in the group here. It's really cool. I've got Teresa Ford hanging out with us tonight. Really cool to see you guys. I've got Bill Williams, man. Great friend of the channel. Mixel Plick in the house, Big A, who asked me a very interesting question about Roth IRA contributions. You guys know that come January 1, you can actually contribute for the follow-on year. And I always look at Roth IRA contributions and talk about them. There's an overlap period from January 1 until April 15th to where you can contribute for the previous year, but you can also, you're eligible to start for the follow-on year. But the follow-on year in January 1 of 2019 is going to be contributions for 2019 and 2020. So if you max fund it for 1920, 2019 and 2020, you're going to have that Roth portfolio completely funded all the way up until April 15th of 2020. So you guys kind of need to understand and just kind of commit to memory that funding cycle. Most of your brokerage houses will track that for you, and they won't allow you to contribute any more than your maximum cap for the year. At least that's the way Merrill Edge works. It's actually quite convenient in that they track it that way for you. I bought my first shares of NVIDIA. I've got Gary Welch who's talking about adding some chip exposure. You just make sure you're buying these stocks within a self-directed account. I had a comment come through the channel that was interesting. It was asking me who I go through to be an independent investor. So pretty genuine question, honestly, but it just goes to show how many people don't understand that this option is out there for people. And that's something that I'm really the most proud of, honestly. If there was, in the course of building the channel up to a sizable amount, like 10,000 subscribers, for example, I would put the majority of the benefit on the folks that have really heard the message and deployed techniques to start putting their money to work for them. And I think that's really the key of the whole thing. I just wish I had this information earlier. I've got a lot of people that come in the community and they're saying, geez, I wish I could have understood this earlier. And honestly, I feel like you're kind of lucky if you're one of those younger folks in the group, or even if you're my age, or maybe even, in your 50s and 60s, and you're coming across this information. If you're 50, 60 and you're like, wow, Ryan, you're right. I wish I would have heard this information younger in my life. But certainly I've got, a couple grandchildren, or I've got a couple children that could certainly get off on the right foot. You don't think for a second my kids are going to be doing this? Yeah, absolutely. The offspring of the Independent Investor channel will be independent investors. I guarantee it. I'm already making them independent investors, and they don't even know it yet. So still stacking up cash and waiting for the roller coaster to level out. I've got Bob right here. Yeah, I think that's a prudent move. And it kind of sparks up a discussion about, I talk all the time, and people want to say, well, I want to save up. I had a really good discussion within the Facebook group, actually. One of the guys in there was talking about saving or investing money to have enough for a down payment on the house because he wanted to buy a house in 5 years. And I think both of those are awesome goals. They really are. But I've always advocated for keeping savings, keeping investments. Don't try to invest to meet another goal. Always keep your invested capital invested and on track to meet your goals down the line. If you're saving for a down payment, do that. It's an admirable cause. But make sure that you're making those savings over time and keeping them kind of separate, maybe in a savings account or something like that. But it never hurts you to originate multiple pillars in kind of building up your net worth over time. It's not going to happen overnight. And I approach the Independent Investor channel the same exact way. I look at it like we're building with each new subscriber in the group that comes in, or maybe somebody kicks in on a live feed for the first time. I'm really looking to identify what it is that you need, and hopefully we can provide that service to you over time. So, but let me try to get to some of these questions here. Coming at you live with sound. Yeah, no kidding. You guys couldn't. I had an excellent intro on the first live feed that I'm going to actually erase and not upload. So I do apologize for that. Great dip for NVIDIA. Good scoop. I do agree. It's a good way to do it. In response to Bob's question about just stacking cash right now, just be kind of careful with that. I always recommend, and I've got Lydia in the group. Welcome to you. Absolutely. From the Sunshine State. Very cool to see you in here. I caught your live feed last week for the first time. I was up late. She came back to me and says, "Isn't it late, Ryan?" I was like, "Yeah, hell yeah, it is." I think it was like 12 or 1 o'clock or something, but it was cool to get to catch your live feed last week. Keep doing the good job that you're doing, man. Shooting YouTube is a lot of fun. It really is. We can talk all day about stocks and, investing and money, but quite frankly, money in and of itself is a boring topic. It really is. It's an intriguing topic, the topic of investing and looking at stock and that type of thing. But, it's really cool to meet a lot of different like-minded folks and hearing different ideas about what you have. But I do like the idea of saving cash. And this can be kind of one of the topics that I kick off on, and just let you guys know that, this is part of the independent investing philosophy, in that if you're going to go on your own, you kind of have an obligation to yourself to really try to build up a cash buffer for yourself. Do what you can do to try to do both if you can. Even if it's, if you had $50 to invest, don't be afraid to split that money down in half and just take 25 and sift it over into a savings account, and then $25 into an investment account. Don't ever be afraid to do that. I just think a lot of people, when they start, they are excited about investing, but they forget some of the fundamental, foundational perspectives that I offer. And you're also not going to get it from a financial planner. If you go in there with $1,000, they're going to want you to blow it on the first mutual fund that they recommend to you. And I just think on the Independent Investor channel, we talk all the time about, seeking out 100% potential on your money down the line, right? You're not having money lost to fees over the long term. So when you do that, you've got such a wide margin for error that why not take some of that money and safeguard it a little bit? You don't have to have 100% of your assets tied to the stock market. You can have a little bit over here, maybe even some gold and silver as well. And I don't know, I did have kind of an idea about kicking over into some of my links, my favorite links that I've got. All those things are really important in validating. I offer on every single one of my videos the compounding interest calculator. And if you guys haven't taken a look at that, you need to do so, but you need to look at it through the eyes of an independent investor. And you need to understand what the effective fees are over that money over time. It's super, super important for you to kind of understand, not to be 100% tethered to the stock market. If you're sitting on a portfolio right now of $10,000, $15,000 and you've got, $500 in the bank, and that's okay. Just look at that $500 as an asset that might be a little bit underweight that you want to try to build up a little bit right now, so you're prepared to enter the market upon a downturn. So really, really cool question. Thanks for generating that. It's one of my favorite topics to talk about, because it's one of the worst mistakes that I've ever made, is to become overexposed to the stock market. I don't plan on ever making that mistake again. And I just encourage the heck out of that for you guys. Even if you're young investors and you want to start dollar cost averaging at $25, go ahead and do that, but don't overexpose yourself. especially to where you get in a pinch and you're having to liquidate your investments. You never ever want to do that. So let me scroll down through the list here, man. I've got, what do you think of Roku? Roku's right above my head, actually. It's a product that I use, and I actually like it. I may be one of those cord cutters. That's why a lot of stocks like Verizon and Comcast and all those are stuck in the mud and they won't move. That's what it is. And it's plagued Disney to a lesser extent. Just Disney has so many more properties that are generating so much better income for them. But I like Roku. I'm not sure if I enjoy Roku, the stock, so much. I think there's a significant amount of offerings a lot better than that. And you know, General Electric, that's one of those that I'm really disappointed. I do believe the company will turn around. I really do. It's absolutely undervalued right now. And I just think it's funny, you know, on one hand, we want to talk about every pot stock under the sun, right? Because they're in favor. And General Electric, a company that's undervalued right now, no doubt about it, is one of the worst hated stocks on the street. And, you know, it really just, to talk about it right now, you'd think you're insane to invest any money in the company. But, you know, it's got $80 billion in market cap. Certain segments of the business do make money. Others do lose money. Others are kind of a break-even piece of business. But the CEO that they got in place right now is, I mean, he's good. He took Dan Hour's stock and just made it a champion over 5 years. And I believe he'll do the same thing with General Electric. I just hope they haven't tarnished that reputation and driven the company into the ground. We will see. I've held lesser of stock through worse times than this, and I believe General Electric will have better days. And I'm still holding my 185 shares, no doubt. So that stock goes to $5 a share, I'm going to be placing a big bet on it. Big. I'm an investor. That's just the way of it. And I see a lot more value in a General Electric here at $9. I mean, I see value in General Electric at double the price it's at right now. So we'll see. I mean, we'll see. I do have time on my hands. I've got a long position already on it, you know, and I've started a new position as well. For you guys that don't know, I take all my YouTube earnings and they all flow into a SEP IRA, every single one, every single dollar. I've yet to render one single penny on this channel. So that's just what I do to defer the taxes down the line. So I've currently got a stock portfolio built up, you know, to practice what I preach. I'm kind of have this grand idea of taking YouTube earnings and generating a money machine over time, because the cool thing about YouTube is it's an investment that never goes down. Never. So pretty exciting stuff, man. It really is. So guys, welcome into the group. I really appreciate you coming in. What I was saying on the last live feed on my superb entry that nobody heard is I do plan on doing a compilation of videos, and I've already started doing it. It's going to be really cool. I'm going to cut and paste some of the cool comments that I've got. I do plan on turning out the video at around 7:30, maybe 4 weeks from now. I have to make 10,000 subscribers. Hell, who knows? Maybe it'll take another 2 years to make 10,000 subscribers from here, but I don't think so. I anticipate it happening in about a month's time. And what I plan on doing is releasing that compilation video, basically the thank you, the 10,000 subscriber video, and then we'll go on and do the live feed as normal at 9 o'clock. So I think that'll be pretty fun, and I'm humbled. I never would have thought that this would happen so soon. I do have a lot of people that I do need to thank out there, and you know, they've helped me immensely along the way, no doubt about it. So those folks will be thanked, and you know, I'm very, very humbled, and I'm very proud of the fact that we've been able to at least touch so many people at some point in the history of the channel, man. You know, 2 years in retrospect, I just reflect on how much work has went into the channel. And I say it all the time. Having a YouTube channel is not easy. It's really not. I don't know if Lydia could back me up on that or not, but I don't know if she's, encountering some of the times where you have to kind of persevere. You might not want to make a video, but I think if your heart's in the right place and you're doing it for the right reasons, I think it makes it that much easier to do so. I don't know how these guys generate videos because they have to. I don't know how they do it, honestly, because I like the freedom. If I don't want to make a video, I don't. And I'm certainly not going to push out the daily news of the day. Forget it. You'll never see that crap from me. No way. No way. We've got way too unique of a message to bastardize in that manner. We would never do that. So, yes, it's working. Bi-weekly, 230 per pay period. Miles Jenkins, I think you're talking about how much you actually invest every 2 weeks. That's really good. That's a killer schedule you got yourself on, man, for sure. I want to scan through here. Happy Friday, people. Thoughts on Nike and Sirius Satellite Radio? Wow, that's a couple of interesting ones. I've got Mike Lowry on the group. I think the time to buy Nike would have been when everybody was bashing on Nike when it was in the 50s. Now everybody's on board with Nike. Everybody's off the Amazon bandwagon now. When just a month ago, 2 months ago, it was the hottest commodity you could possibly buy. So, certainly want to do your own research. Nike's not something that I would want to buy right here. I like Under Armour, as recessed as it's been. Under Armour was a left for dead stock when it almost hit $10 if it didn't. Now it's coming back as well. Nike's a stock that I don't own. I don't own a lot of apparel companies like that. But Sirius Satellite Radio is it's a product that I really, really like. But I don't own the stock here. I just don't know if Siri is the way to go or Pandora is the way to go. I'm not really sure in that space, that niche space that they're offering. But if you guys know, man, you guys remember Sirius Satellite Radio was the IPO the same year as Google. And Siri got more hype than Google did at the time. I find that really, really funny because Siri remained like a $1 stock for so long. And here it is like, wow, it's $7 and it's been like, 15 years. So go figure. I don't know. So good question. Thank you for that, Mike. I appreciate it, man. Very cool. I think it just skipped on me again. I think Lydia just asked me about Roku too. You guys are all about Roku. I think if you wanted to be on the front of the wave, I think Roku is interesting here. What do I mean by that? I just think, cord cutting is going to continue to punish AT&T. It's going to continue to punish Comcast. All those companies out there that are providing traditional cable and even satellite services. I like Roku. I think it's a great product. I'm enjoying the heck out of it. I find myself more interested in searching through some of the free offerings through Roku. And if you wanted to add the Netflix service to it, you could. I don't. I find that there's plenty on there. But I would just be careful about owning the stock right here. If you guys had some of your money that you wanted to put to work in kind of a more of a speculative fashion, or more of a growth fashion, you could take a stab at Roku here, but it's not a stock that I'm interested in investing in right now. I just have been kind of muted on the stock market the last couple months for good reason. This is just what I do. I kind of shut down and I let my investments work for themselves. There's no reason to try to outthink the stock market. If you guys want to buy into a sector right now, look at oil. If you don't have any oil portfolio exposure, now's the time to start taking a crack here. Look at ConocoPhillips. Look at a Royal Dutch Shell. I own Royal Dutch. I own ExxonMobil. You could look at Valero. Some of these names are really, really just getting beat up. I think Halliburton is a wonderful pickup right here. Good grief, at $36, that stock should be double that. But you want to buy it when it's here, because they don't give you too much opportunity. So you got to jump on it when they come. I've got Stay True Warriors in the group here. So welcome to you. And right below, I've got Noella. And yes, I am back. I apologize for that. Hope all is well for you. It's very cool to see you in the group here. I've got Ernest in the group. I'm starting to kind of recognize some of these new folks that have made their way into the community of investors, and it's really cool to see you guys. They hit me up with a question. It says, received my first ever dividend from AT&T. It's funny how you remember things like that, man. I remembered my first dividend, and I was like, this is pretty cool. This is pretty cool. Recently in my Roth, excited to watch that dividend reinvestment program work. Thanks for all you do, Ryan. You're changing people's lives. I really hope so. It's one of those topics. It's really fickle. You guys, and I'm just a normal fella, right? I've got a lot of friends of which that I would probably never mention. A lot of them kind of know that I do this channel, but I just think there's a lot of people who wouldn't feel comfortable talking about this, even with their friends. Some would, some don't. It's just a funny topic that way. And it's a funny topic in that a lot of people can't just be open-minded for just a few minutes and hear somebody out and say, wow, this person has a really interesting perspective on it. Why don't we hear about it more? How does it work? Can anybody do it? Can you succeed at it? Do people succeed at it? And the interesting part about it is a lot of people don't succeed in it. And that's where the Independent Investor channel really finds its niche in exploiting so many different avenues that you can succeed in if you just trust your program. And a lot of people don't have that validation in saying, I want to invest on my own. I don't know squat about money. It's a scary thing. And if you guys are a couple, if you've been married for a while and you sit down and it's even worse if you have a spouse and you're like, okay, we both don't know what to do with money. This is a scary proposition. What I would encourage each and every one of you guys to do, and I don't mean to imply that that's your guys' situation. If you are married or you have a spouse or you're just seeing each other or whatever, but man, the earlier you can have these discussions, the better off, in my opinion. I just really think it's important to bring options in a landscape that would have you believe that you don't have any options. Does that make sense? And if you really stop and think about that for a second, where is all this money coming from to inundate viewers over the television set as to why you need to go with their brokerage house, as to why they go with this one, because it is absolutely cutthroat to fight for your business, because they have found a way to attach in every form or fashion a fee to what is your right, and the cool thing about this is really just to drive out all those. And when you talk about your AT&T dividend, it's funny. I've heard over the years rationale to say, look, if you own a dividend paying stock, the dividend is kind of like a counterweight to the fees. So the dividends are kind of a wash, to help pay for the fees. And then you wait for the stock to appreciate. I've actually had that rationale explained to me on multiple times, and it came from the mouth of a financial planner. That's actually how they sell people on, justifying you taking the risk, you owning the stock. And because I pay you a fee to help manage your money, that somehow that 3% fee is justified because you pay a dividend, you're being paid a dividend, or somehow you should feel guilty, right, for making money off of your own money. And so I really congratulate you. I really do. Continue to learn from the channel. I'd love to understand a little bit more of what you have in the portfolio. Hopefully you guys are buying into the idea of, the passive ETF route as well. Hopefully you're buying into the idea of having multiple pillars within your portfolio to work for yourself. AT&T is really one of those blue chip companies that you can own forever, but there's a lot of good quality companies like that that can give you different exposure in different sectors, whether it be single stock, whether you do end up going with, more of a broad-based market ETF. So whatever it is that you guys decide to do, make sure you do it within a self-directed account, because it just feels so much better to take on that risk and be rewarded 100% for taking on the risk. That's the way it's supposed to work. But all too often, people really just don't see it that way, or just don't know to see it that way as an alternative option. And it absolutely is. It absolutely is. A lot of people have no idea they can do this. I've got Alex J right below that, who says, is IBM a good buy? It is. It's a good buy right here. I think at 115, 114, it would have been the optimal buy point. I don't know if it'll get back down there again. But IBM is absolutely a buy right here at 114, 115. I think right now it's in the low 120s. So keep an eye on it. I don't think it's going to stay here for very long. Just a fantastic dividend payer. I just think with their acquisition of Red Hat, I think they got really oversold, really kind of stupid. The stock was trading like a penny stock for a couple days there. I just thought it was absurd. And when you've got the CEO buying shares hand over fist, Warren Buffett, the CEO for Apple, there was a bunch of big institutional buyers that stepped in and picked up IBM. When that kind of stuff is going on, I'm not saying to buy exclusively on that news, but it means something when the CEO is willing to buy, $2.5 million worth of her own stock. That's something to not ignore. And yeah, IBM it's a buy right here, no doubt about it. You're basically getting all the benefits of the transition that they've been trying to move from traditional server business and hardware business to being the premier player in the cloud. And with their investments in blockchain technology and artificial intelligence, it's a no-brainer. It's easy, guys. IBM is a money generating machine. They really are. It's a buy right here, no doubt. Help you out in your blue chip technology sector. I'm talking to you guys, the InMunch group as well. If you needed some technology exposure, IBM would really complement AT&T in a portfolio as well. So something to think about. So I'm going to kind of scroll down here. Dividends are delicious. That's exactly correct. So is that microbrew. Fantastic. So good to have you in the group, man. I don't think this group would be the same without you. Obstinate one. I don't think the group would be the same without you. No doubt about it. You are a cornerstone in the live feed from YouTube, Independent Investor Channel. So stay true, warriors is in the group. Hello again to you. How would you manage diversify a Roth and a taxable account at the same time? I think you overspeak. Jerry Welch is a very, very good friend of the community here. Don't overstate the word manage, please. There's way too many products out there that are aimed at being just a barometer, a plug and chug. For a lack of better terms, you buy into the product and all you do is fund it. You don't have to be an investor. You don't have to be a manager. You don't have to diversify, right? So depending on the exposure level, which is something that you do need to determine. And what I mean by that is if you've got your account and you've got $5,000 to invest. Let's say a prudent plan would be to say, gosh, Ryan talks about the 50-50 plan all the time. Take $2,500, put it into the Vanguard Total Index Fund, and there you go. You have one ETF. That's it. All you have to do is set up a dollar cost averaging now that you've got that $2,500 base, right? Maybe filter $2,500 or $25 every couple weeks into that account or every month. You've got your dollar cost averaging. You set that dividend reinvestment up because you will be paid dividends through the VTI. And then you've got your your cash on the side. So you're good there. As far as the taxable account really shouldn't come into play until you can maximum fund your Roth IRA. don't try to underfund a Roth IRA. That's the most important $5,500 that you can put away initially. Okay. Now, when the 5,500 becomes not so much of a problem for you, and you've got a good amount of savings built up, then you can go ahead and start that brokerage account on the side if you want to. Now, keeping in mind that I trade a little bit more often in my brokerage account, because my sheer purpose in that account is to provide me additional income. That's it. Now, I don't make a whole lot in the brokerage account. Last year, I was able to trade up an extra $10,000, okay? But that $10,000 is taxed as earnings, okay? So there's no real reason to engage in that level of activity until you have the baseline and you're able to fund that Roth IRA first, all right? So get to that first 5,500, and then when you get established in your career and you've got some real money rolling in, and when I say real money, guys, you have to understand I started with nothing. So the first time I made $25,000 a year, I was ecstatic. I was like, are you kidding me? $2,000 a month? I'm going to be a millionaire. I still feel that way, and things have changed significantly financially for me. But I think a lot of people think that they need more than they think they need more than they have, or they want more than they actually need. I truly believe that. So it does kind of come down to perspective as well. But certainly for new investors, I would just start the one account. Start the savings, build it up, and then start the self-directed account. Start to build that up, and then once that gets full, for a lack of better terms, and you're able to fund that over the years, then you can go ahead and branch out and pick up that brokerage account as well. So cruising right down the list here, guys. I got a ton of questions in here, and I thank you for that. Miles Jenkins, fill the Roth, then go to taxable. Yeah, so he just said it in a matter of like 3 seconds, and I said it in a matter of like 3 minutes. So apologize for that, but you're exactly right, Miles. That's how you do it. Good question, Gary. Appreciate that. That's really awesome. But just it's more of an order of precedence, and I really I tend to shy away from certain words like manage, because the irony in the whole thing is when you go to a financial planner, for example, and they're supposed to be somewhat managing your money, that's the last thing they're doing. They're not. They're getting paid to provide you financial planning, okay? But what they're going to do is they're going to put you into a mutual fund and tell you to stay in that mutual fund forever. That's exactly what they want you to do, all right? So when you talk about how much managing is necessary, I think that it's misspoken a lot. In that a lot of people think that they need to be retooling their portfolios every day, and that's just not the truth. Enter into good quality names, and then your work is done. It really is. Do other things with your time. Build cash on the side. Work on your budget. Allow those investments to do what it is you told them to do, and that's be investments. All right? So very cool. I got Esteban Avia. Evening, guys. Now that I have started to invest, I keep getting offers to sign for programs that provide advice on stocks. Any of them worth my time and money? They are appealing, but I'm very skeptical. I've never been involved with Vest, but that's the one that appeals to me the most. It really is. And not to say that it's going to provide you a strategic advantage ever, but every little bit helps. And I'm not going to say that it's the end all be all. I do know some folks in the community that do participate in VectorVest, and they're very, very happy with it. I think VectorVest, when you get past the preliminary charge that they charge you, is actually quite expensive. Okay. So you kind of have to ask yourself, okay, do I go for some of those programs that are supposed to help advise me up on stock? Because every dollar that's devoted to that type of program is one less dollar that you can take and invest for yourself, right? So you got to be a little bit careful with that line of thinking. I'm always an advocate for, I've come out with videos talking about this. Don't waste your effing money, because I really mean that. I think all too often people just want to give away the farm, and the last person that they want to pay is themselves. And we all know that we should be paying ourselves first. But is that something that we're actually doing, or are we looking to, provide ourselves an advantage when there might not actually be an advantage there to be had? So you got to be kind of careful with that. If you had an extra $100 a month, good grief, how much education do you honestly need to put it into a passive ETF over time, or buy a good quality blue chip company? Remember, I'm providing you the strategic advantage through the independent investor channel, and I haven't charged you a dime. Okay, take it, run with it, deploy it. All right, you're already a winner. You already are. I know I am. And this is the same strategy that I use, that I share with you guys. It's the exact same one. All right, I leave no stone unturned on the channel. I provide all this value to you guys, no charge, and it will continue to be that way, no doubt. It will continue to be that way, because in a landscape that seemingly looking at every angle to take advantage of a potential subscriber base, I'd like to do things contrary to the masses, and that's the way we will continue to do so. Maybe I'm giving up some money. I don't know. I'm certainly not sacrificing integrity, because nobody can argue with free. Nobody. People try. They really do. They really try and say there must be something. There must be some ulterior motive, And the funny thing about it is, I know with regard to true success, I'm successful in a lot of different ways. But with regard to finances and my self-educating myself up, I'm very successful. And here's the thing, I wasn't given anything. I came from nothing. All right. Lydia knows where I used to work down in San Pedro, and I wasn't even in San Pedro. I was below San Pedro in the port. Okay. There's Palos Verdes, then there's San Pedro, and then there's where I lived, down at the bottom, where nobody else lived. All right. And she will get a laugh out of that, because she knows exactly where I'm talking about. I was down in the port. I didn't have money to rent an apartment down there in Los Angeles. I didn't have that kind of money. So you want to know what I did? I lived on a boat. All right. I still remember my first night in LA. I was so hot that I slept out on the bow of the boat, listening to the helicopters go above my head all night as I was sleeping out on the bow of the boat. True story. True story. All right. So I came from the trenches, So to have worked through all of that, started from zero, been in hawk with the IRS twice in my career, not once, but twice, in tax trouble, and found my way out of that. And now, amassing, working on, going on $500,000, and that's nothing to scoff at. I was given nothing. And so, for you guys that really hear out the message and be like, dang, what the heck, if I can just avoid half of the mistakes this guy makes, or this idiot makes, I could be double successful. And there's some real truth to that. There really is. If you guys are some young folks out there and you're like, wow, Ryan talks about the wasted money, that goes into the financial planning institution. He talks about, how you will never hear the information anywhere. All that stuff is true. Think about it for a second. It doesn't take that long to really say, gosh, there might be some substance here that makes a lot of sense. And the more and more you make it make sense for yourself, the more snowballing it's going to be for you, and the more consuming it's going to be as well, and the more clarity you're going to receive on the issue, man, because you're going to walk around like something that a lot of people don't know. Trust me, because it's going to be true. You will. You're going to know a lot more than a lot of people know. That's the truth. I got Andrew Trapman here, man, my good friend from, again, another place that's on my bucket list. Would you put me up, man? We could have a Foster's together if I come down there. I had one of my subscribers from New Zealand, man. They were like, yeah, you're good to go. I'll put you up. But he says Disney is doing great. Disney's just a cornerstone in my portfolio that I'll never trade. It's one of those stocks that I'll own forever. I'll be coming out this week with my top 10 stocks to own forever. I really did have to up it. You'll see the original 5 on the list. They haven't changed. Of course not. It'd be kind of funny to come out with a 5 stocks to own forever every month, like some other channels to do, but I don't do that. So the 5, and then I've added 5 to the list basically because I had to. I really did. So I've got Obstinate One here who's asking a question. Ryan, I'm almost ineligible for the Roth account due to my income. Yeah, absolutely. It's around 130,000. There's a little bit of a break there at the 120 level, I think, where the contribution limit actually goes down. It's kind of weird. I don't know why they come up with that, but I guess my only option is an individual brokerage account, correct? I already have a 401k. Any ideas? Yeah, you're exploiting them. But if your income is below that threshold, get that money in there now. I mean, I don't care if you can max fund it up to, until your income, goes over that amount. You still want to get that in there. If you're able to safeguard 20 grand, I'm cool with that. It's not going to hurt you. I mean, that 20 grand over time could really grow and accumulate. And it doesn't mean that you can't trade in that account. It doesn't mean that you can't try to accelerate that account up in the meantime. But certainly if your income is large enough, I want to make sure that you're max funding your 401k. That's another good option. And then there's nothing that would prohibit you from looking at some alternative strategies. If I was in your case, I would look at real estate. I would look at rentals. I mean, those, to hell with the Roth IRA. If you're making over $130,000, now you can really get creative. You know what I'm saying? I would absolutely have some precious metals as a hedge in my portfolio. Scribner did an interesting piece tonight or yesterday with Gutierrez. I think he released it tonight. And they talked about flipping cars. Hey, man, be a hustler, man. Have a side hustle. If you're ineligible to do the Roth IRA, I think that's really unfortunate. I really do. I don't think 130,000 is a high enough threshold for it. I mean, hell, I talk like, I make half that, if that. But for you guys that are doing 130K, I just think, tax protecting money at that point is kind of futile because you're bringing it in. But don't sell yourself short. Make sure that you're at least doing a traditional account to try to reduce your taxable income might be in your best interest as well. And that doesn't mean that you can't have a self-directed traditional account as well. It can be self-directed just like any other account. So that would be my offering for you. I wish you all the best. There's a lot of folks in my community that are in the same boat. They're not eligible to do the Roth, and I salute you. I think that's awesome. Your approach to investing and building wealth shouldn't be any different than mine or the individual who's got, $500 looking to start, who's 19 years old. Building wealth should be approached the same way, right? It's all kind of relative if you think about it. It's just that you're working with more capital. Therefore, you've got the ability to expand the number of pillars that you actually have. I'd like to see you have why not have a nice bond or fixed equities piece of that portfolio? You know what I mean? That's an option for you as well. So very, very good question. I really appreciate that. That's awesome. AVA, I have Home Depot on my radar right now. Lowe's is closing stores and Home Depot got slammed along with home builders. But as a retail giant with a solid dividend, it's a solid cornerstone. So Home Depot is going to be one of my stocks to own forever. And this might surprise a lot of people. It really might. But I'm going to give you 1 out of the 9. You probably already know the first 5 if you've watched my 5 stocks to own forever. So I don't want to spoil it for you guys. There's only 4 more picks that I'm going to offer on that. But Home Depot is an absolutely wonderful retailer. It's in the top 3 of stocks that I really want to add to my portfolio. And the other ones, if I gave them to you, I'd probably give away the other half of the video. So I will kind of wait on that. But Home Depot is an absolute buy. It's one of those that you can look at and say, you know what, I just want to invest in this company for all the right reasons. You're getting a fantastic entry point. It's off of its high. I believe its high was around 217. I don't even know what it's trading at. I didn't even watch the market today. I was kind of like, geez Louise, what a wash, you know? But yeah, Home Depot is one of those, man. And this is the type of discussion that I do not understand why there's not more YouTubers talking about it. And Lydia, I'm not talking about you, but I'm talking about the landscape in general. We need to start to facilitate more of a discussion about some of these quality companies. All right. I had Jeremy on the financial education channel hit me back again and said, Ryan, what are you talking about with Coke and Procter and Gamble all the time, et cetera, et cetera? You know, I'd love to see over the next 10 years what's going to outperform Coke and Procter and Gamble as compared to Google. And I was like, they're two completely different investment avenues. They really are. And I think all three of those stocks are actually fairly low risk, to be honest with you. Google is a little bit more growth, right? Whereas Coke is all value. Procter and Gamble is all value, right? The other two are dividend payers. Google, of course, is not. But I think we need to have a little bit more holistic idea about approaching the stock market. You know, I'd love to see more channel creators come out and really talk specific sectors, you know, and people should come on my channel and get ideas from me. I'm sure that they do, and that's fine because I've got a hell of an imagination. I mean, I could talk all day and make 100 videos just about the utility sector. You know, I mean, would they get views? I don't know. My point is we need to facilitate a little bit more of a broad discussion when talking about options. All right. And so many people want to channel people and take away those options where I want to exploit the options for people. If you want to invest in Coke, go ahead. If you want to invest in Procter or Home Depot, you know, go ahead. If you want to invest in Duke Energy, right on, do it. Okay. But don't limit yourself in your perspective and say, I only want to invest in marijuana stocks, you know, or I only want to invest in, you know, growth companies. Okay. Don't ever limit your perspective in doing so, because I would say there's no real reason for me to sit here and tell you how important it is to invest in this very important bucket that I talk about all the time, the self-directed account, only to be subjected to an over aggressive amount of risk, right? Because those two are now going to become counterproductive and work against each other. All right. So it's just very, very important to kind of help us facilitate a little bit more open dialogue. I hope I hit that question. Thank you for that. Hector Mendoza, 26,000 so far in my Robinhood account. That is awesome. Keep building that up, Hector. That's awesome. I'd love to see those funds transfer over at some point if you don't already have your Roth IRA. But Hector says he's down 1,200 on General Electric. Yeah, it's been a real dog this year, no doubt about it. We're talking about the stock at its absolute worst right here. Analysts are calling for it to go to $5 or $6. It's pegged under value right now, and yeah, I really have a sense that the CEO is going to turn things around and start to trim away the fat, start to exploit some of those segments of the business that are actually firing away. And at $80 billion right here, it's extremely undervalued. I know a lot of investors are bummed out about the dividend. I'm not. I thought they should have cut the dividend a long time ago. I really did. If I had it to do over again, I wouldn't have invested in GE. But what am I going to do? Am I going to cry about it and whine about it? I don't do that. I really don't. I liked what I saw when I invested in GE in the first place, but there's no way that I could have seen how blatantly that company's reputation was being taken advantage of by the laziness within that company. Honestly, they had their heads in their ass. That's just what happened. Had their heads up their ass and they got bit. There's only so long you can do that before it starts to shine through, and you just start to burn through money because it's just one of those things to where you think it's just infinite, and money is not infinite with any company. You know, it's amazing to watch this for what was a bellwether in this country for 100 years, be driven down into the toilet like it is right now. But if anybody can bring the company back, it's this guy. They do really have some phenomenal business. And I think sub $10, it's a buy right here. Anything less than $10, General Electric is a buy right here for an eventual doubling of the stock. So I think you're just fine. Continue to hold it. Do not sell it at this level. Do not sell General Electric at this level. Okay, it's going to make you feel good because everybody else is seemingly dumping the stock. Buy the stock here. Buy it. All right. Pretty simple. Contrarian perspective. That'll make you more money in the stock market over the long run than panicking every time a stock pick doesn't work out for you. The majority of them will actually work out for you. General Electric was one of those that just didn't work out for me. And I'm holding it. I'm fine. No problem. It's still General Electric, you know. It's not GoPro. Sorry. So what do you think is a good entry point into General Electric? Yeah, I mean, that's what I think. But there was a comment at the top of the live feed here tonight talking about, wow, there's so many other good entry points and so many other good companies out there. You know, I mean, are you really wanting to bottom pick a company that's obviously going through a restructuring? Caterpillar is one of those. Geez, I'd rather buy, you know, I'd rather buy one share of Caterpillar than 10 shares of General Electric right here. One share. I'd rather own one share of Caterpillar, honestly. So just kind of think about it, man. You always want to buy the best of breed, and General Electric is no longer the best of breed anymore. United Technologies is another company that I owned. 3M just came off a bad quarter. 3M is a great industrial offering. Greg, thank you so much, man. Really appreciate the support of the channel, man. Long-standing support. Really appreciate it, man. I'm going to try to pick out one of your comments, and you've been very loyal over the years, and I really appreciate it, man. Just a shout out to you directly. You'll be coming up on my 10,000 subscriber video, man. I know it doesn't seem like a whole lot, you know, comparatively speaking to the rest of the YouTube community, because I think a lot of the landscape on YouTube is devoted to entertainment, okay? And it's not thought of as a place for financial information specifically. But I do, however, believe that it is a platform where people come on and they're looking to answer the "how do I do this" question, okay? And so I do ask back a rhetorical question of YouTube. Why not? Why can't it be this? And I'm looking to seek out an audience that has been undiscovered through YouTube. And that is a little piece of my insight, a little piece of my psyche. If you guys heard what I said, you know, a lot of people out there, and I know Scribner's he's going to turn over 300,000 subscribers. You know, Jeremy's pursuing, you know, 230 right now subscribers. You know, I think that's peanuts. I do, man. I really do. I think it's peanuts. I think they're missing out on a bigger picture. I really do. I think there's a ton of people out there that can really, really benefit from understanding the niche message. And it's really the core of what drives the channel. It really is, because I've got comments, you know, from some of these folks in the group here who are saying it makes sense to me. It really does. You know, it didn't make sense at the start, Ryan, right? But I listened to your channel. I watched a few of your videos, man, and it's starting to really make sense. I understand that the most benefit that I'm going to get out of the self-directed program is to take every single eligible dollar that I have and pack it away in that account for as long as I possibly can. And that's the very best advice I can give you in summary. Very, very cool stuff. Very cool. Home Depot is a great company. They have a lot of debt, but should easily be able to handle it. They do have a lot of debt. I totally understand that. Most of those blue chip companies do. It's really kind of tough. GE is cutting their dividend to almost nothing. They basically cut it to nothing. I mean, 1 penny is kind of a kick in the pants, to be honest with you. GE needs to find a bottom. They do. They do. It's just been absolutely crushed. And if nothing else, if you own the stock, hold the stock. You will be rewarded for holding the stock. Okay. If you don't own the stock, make this be a lesson to you in paying attention to this. Don't ignore it. All right. Pay attention to what can happen to a company that was seemingly unshakable. Every company out there is vulnerable, man. And I'm just kind of waiting. Is this Facebook's time? I don't know. I mean, I'm holding the shares right here, but it's, is it one of those companies that is vulnerable? I don't know. Time will tell. I think GE does come back, man, but it serves as a lesson to all investors to really understand why we buy the best of breed in any sector, why we're buying the Apples of the world, why we're buying Disney, why we're buying companies like General Electric, because, up until, 2 or 3 years ago, General Electric was a wonderful 4% dividend paying industrial company, right? Who would have thought? Who would have thought? Now, I didn't own the stock in the 40s. I didn't own it in the 60s. I didn't own it in the 40s. And I didn't own it in the 30s. My entry point was $18. Okay. So I'm still down huge in the position, but good grief. Some of these guys that owned the company for years, some of the folks that, hardworking men and women that have worked in the company for 30, 40 years, how do you think they feel? They've been given stock options only to see that dividend cut to almost nothing. That's terrible. That's just terrible. Terrible performance, but typical greed. It's something that we want to talk about all the time, because greed is something that it really just consumes the entire landscape. When anything involves money, most people, most companies will do whatever they can do to go after the bottom line. That's a fact. They really will. I've got Bob Wright who says Comcast is talking about selling a Roku type device. That might be a consideration. They're going to have to. It's a paradigm shift to where if they don't get on board with it, they're gonna get crushed. They really are. And that's one thing about AT&T. AT&T has multiple businesses, and I know they're trying to acquire everybody under the world, with their acquisition of DirecTV and their acquisition of Time Warner. You can't just acquire growth. You got to get on board with where things are going. If we haven't learned anything at all from Netflix, pay attention. Now, Netflix is not a company that I will invest in. Okay, it won't. I just think they burn through way too much money to provide the content that they provide. But they own that niche. They really do. And Roku, I just think, is a really cool product. Just a cool product. Putting what people want a la carte in front of them to order what they want, when they want, and how they want to consume it. It's just in line with where, consumable content is going in the future. They don't want to pay for, I don't even know what the hell I get with Verizon. I don't even know what the hell I get. It seems like I get 4 channels and I pay $150 for it. Now, half of that is my high-speed internet, which I've got to have to talk to you fine folks, even if it is without sound. But what am I paying for? I bought Roku for $40. As a matter of fact, I think it was my birthday gift this year. And I love it. I think it's an awesome gift. I think it's an awesome product. I really do. Buying a couple of Google and Amazon shares, exhaust the Roth account. What's your take to buy these high price stocks? Amazon is pricey. Google is not. Google is not high priced. Google has actually come down to be actually quite attractive. If I was going to take a stab right here, Rohan, in the technology sector, I would stay away from Amazon now. If you wanted to buy into a big mega cap tech company, I would buy Google on the growth end, and I would pick up Apple if you don't own it. If you do already own it, I would highly consider you looking at 2 blue chips. The first being Intel, the second being IBM. That would round out your technology exposure to the maximum. I just don't know if I would mess with Amazon right here. I just don't know. I've got 5 shares. But my portfolio is very strong. You have to understand that owning Amazon in my portfolio fits a specific niche of what I want out of my cloud pillar. I mean, I can break down different stocks, and I've got all the major cloud players, which is where I want a good bulk of my money, okay, or at least a strong pillar in my portfolio. So that's why I own Amazon and Adobe and Salesforce and IBM and Microsoft. I own all the major cloud players out there. The couple I don't own, but that just gives you an idea of wanting to have my head in the cloud. I want some of my exposure for the long term invested in the cloud, and that's just where I choose to go. But that's a really cool question. I'm glad you're thinking along those lines. I really do. Try to keep the exposure to technology to around 20% of the portfolio. Don't get so crazy. It's my favorite sector to invest in, and I don't have it all invested. And Google's not a technology company anymore. It's in the telecommunications service, or the newly formed company, and they've boosted up that. But it's in the same sector as Comcast now. Okay. But if you are looking for technology exposure, I don't know if I would pay up for Amazon right here. I don't know. I just think everything's shaky right now, and I would just be very, very careful. Now, right below you, you've got K97 that talks about Raytheon and Lockheed Martin. I don't own either one of them. I own Northrop Grumman, which is my favorite personally. But I love Raytheon and Lockheed Martin. Both of those companies are stocks that need to be high on everybody's defense watch list within your brokerage account. So, is it the time to be rushing out and buying growth right now? Maybe. You always want to buy when everybody else is selling them, I guess. But I'd be a little bit careful with that right now. And I'm just not sure if I'm feeling that right now. If you're going to go long the shares, great. Go ahead and buy it at any time. I think you'll work out over the long term, but I think there's some good buys out there right now that are fairly recessed and a lot more attractive. Is it possible to put my computer share dividend reinvestment program in my Merrill Edge Roth? It depends on what the designation of that CompuShare dividend reinvestment program is. If it's a Roth, they can do a rollover for you. I don't want to misspeak, but certainly that's just an easy phone call, that of which I've done myself. If you were really looking at going with Merrill Edge, they're a great platform. They're really good, but I'm not sure, and I'm not familiar with ComputerShare. I'm not sure if you're talking about the stock or the platform there. So if it is the platform, just call them and work out a rollover to the edge. But if it's an actual stock there, even if you do own shares within that ComputerShare account, if I understand you correctly, they can actually do a like-in-kind transfer and keep the dividend reinvestment program on that. As they roll over those assets. You don't have to liquidate on a rollover. They just roll right into the new account. So pretty cool stuff. Obstinate One says, buy Amazon and Google in an individual brokerage account if it is maxing out your Roth. That's actually pretty good advice. That's actually how I own Google. I own Amazon within the account. I had an extra opportunity there with some 10 grand. So I went ahead and did Amazon within the Roth and Google outside the Roth. That's just what I did to try to get some growth on both sides. I wanted some growth on the brokerage account, and I wanted some growth within the portfolio to kind of balance things out a little bit. So that's what I did. Obstinate One, what are you doing for a living? Yeah, no kidding. I just kind of shrugged it off a little bit, but that's pretty cool. I like that open dialogue, and I love success, man. I would wish anybody success out there that's found a niche and doing what they like to do and making good money. That's awesome. You're one of few. There's not a lot of people out there that make a lot of people out there that are suffering, man. They don't have a lot, and they live paycheck to paycheck. I've been there. I do. So I'm one to acknowledge those folks. I treat everybody the same. And that's what I really like and try to foster when we're talking about this line of dialogue. I treat people that are making $250,000 a year the exact same as somebody who's maybe making $15,000 a year, and just making ends meet a little bit. And that I'll continue to do that, because if you're the person that's making $15,000 a year, but you want to become an investor, we'll make you an investor, no doubt. If you've got that 250 coming in, there might be some more strategic opportunity for you, to accelerate your wealth as well. So it's all relative, in my opinion. And I do approach investing in that way. I really do. I don't think it's one of those activities that are just for the rich, like Obstinate One. I'm just kidding. I appreciate you being honest with me. That was a good question, actually, because I get that question a lot too. So I've got Teresa Ford here. Yes, this is one of the most liberating channels. Great job. I know we helped you. I was glad to do it. I wish I had that time and effort to put forward for everybody. I really do. And that's really why I came out with the channel. And then I try to get these themes and push out those themes through the video, the one-sided message on YouTube. If you really stop and you really listen to what I'm saying, I do think there's really good content there. I really do. There's valuable content. And I know I've got a theme and I revolve around that theme in a lot of different ways, but you have to understand, when you're talking to the masses, there's a lot of different people out there who may hear your message in a different way. So you have to communicate that message in multiple ways. That way they can be rest assured that you're making sure that they get the message, So I don't mind revolving around this one topic. It's an infinite topic. It really is. Talking about investing on your own is so unique that it's not run of the mill. I've said many times, I would have never come out with a channel if it wasn't, just the same old thing. I couldn't do that. It's freaking boring, That's why I try to, on all the channels that I endorse on the channel, I try to get sincerity first. Like, I really don't care what you have to say about the stock market. I don't care. I need to seek out sincerity first. I need to know that you're coming from a sincere place, right? So that's why I endorse the channels that I endorse. You know what I mean? Do you have the opportunity to encourage someone to invest that needs to invest, that needs to have it put to them in a unique way, or come from a person? There might be somebody who hears my message and is turned off because of how I deliver the message. Well, if the next person down the line can get that person to, really perk up and understand the benefits of investing, then wonderful. We've done our job as a community. It doesn't matter if I was the one that got them to do what it is that I thought that maybe they should do, or maybe take a look at. But I really appreciate a comment like that. It's pretty cool. Want to try to be as grounded as we can with our message and realistic with our message. With so many more people visiting the channel, it starts to get a little bit out of control a little bit. And some people come on and they're just like, kind of crazy, like, hey, I bought this and that. And I say all the time, investing is not one of those things you can be irresponsible about. It's not. You have to be responsible with it. You just can't. You can't go at it willy-nilly. You can't. You'll end up suffering. And I want to try to get people past that and understand how serious investing is. And if you're serious about it, I don't care how serious you are, you're still going to make mistakes. But at least you're going to make them with the basics understood, right? And you're not going to make those mistakes frivolously, all right, only to be scared out of the market over time. Very, very important to get those fundamentals down first. And when I talk fundamentals, I'm not talking about stock analysis. I'm not talking about being an analyst. I'm not. What I'm talking about is understanding just the sheer benefits of some of the many programs out there that are available. Some of the products that are available out there that can help us reduce expense within accounts, things like that. So Very cool. Very cool. Good stuff, man. I really appreciate it. Thank you so much, Teresa. I really appreciate that. I like the word liberating. I do feel like we're doing that for those that are willing to listen. Family owns a company, Lydia. Nice. Obstinate one. That's awesome, man. Very, very cool. Really, really appreciate having you part of the community, man. No doubt about it. So, I just jumped. All right. Somebody wants to invest in Kmart as I'm scrolling up through here. That might not be advisable. Yeah, that's might not be so good. Yeah, Dan R. Yeah, I don't have his name actually. I've got Quattro who wants to throw down there. I don't remember his name actually for the GE's new CEO there. There it is, Jeff Imelt. Oh no, it wasn't. So, and I missed a bunch of these up at the beginning here. Hi, Ryan. Do you know if at the end of the year possible to write a check to the broker to cover the commission and fees since they can be over 150 in my case? That's a good question. Whether or not they would allow you to do that, I think so. I think so. The problem is that those fees come off the top every single year, you know, and a lot of people get sidetracked a little bit in what I talk about all the time with the 3%, which, by the way, guys, comes from Tony Robbins. I mean, it's very simple. He talks about it all the time. And it's a great statistic that he throws out there. The other one that I use all the time, who's also from Tony Robbins, who I'm a big fan of, talks about, you know, how money managers fail to meet the benchmark. Okay. That's kind of a Jack Bogle teaching. And, you know, it's one of those that we really need to understand about why we're putting so much money in the hands of the money managers when 96% of the time they're failing, and 99%, almost 100% of the time, they fail to meet the index 100% of the time. Now, hedge funds are a complete circus. I mean, just they statistically lose money all the time. And those cats that are making multi-billions, and they've got money to just throw away and waste on a hedge fund just to be out on the golf course and say that that's what they do. That's awesome. But for folks like me, I can't afford to waste my money. So I've got to put my money to work to give me the best bang for my buck in the future. And this is the best way that I know how to invest in the stock market, no doubt about it. But yeah, I think they do allow you to pay those, but you know, you'll have an account fee of $75, and you'll have different fees within expense ratios within the account. You'll have annual fees that come up. So they found a lot of different ways to charge you those fees, and collectively each year, those typically add up to about 3%, and that's typically what they do. You could probably write them a check, but what's the real difference? You know, if it's coming out of your bottom line, you know, it's still affecting your compounding growth over time. You know, and I'd rather see those dollars working for you over time. I like the value stocks. I'm glad someone talks about them. They didn't fall as much in October. No, they didn't. They sure didn't. GE is estimated to drop to $6. I've got Quattro. I hope I'm saying that name correct. But yeah, the analysts have cut down to 5.6. You know, typically all the analysts want to pile on to make sure that they're right. So GE might get sold down to $5-6. Will it be justified? I don't know. That's a different question for a different day. But I'd be careful with throwing in the towel on GE right here. This might be the very time within a few dollars here of actually buying the stock. So be kind of careful. All right. 666 is my entry for General Electric. I've got Christopher Blaine. Very cool. Good luck. If you can get it at 666, I'd buy a 100 share position there at $666. You'd be good to go over time. That's pretty awesome. Much of GE CEO's future salary is based upon him pulling it out. Yeah, it sure is. I got David Mathis. That's actually a big positive as far as I'm concerned. The stock-based incentive will make that CEO a very, very wealthy man if he's able to pull it out. I've got Larry Massa on the line. Cat is a beast. It is. It's really one of my top industrial plays right here. Just one of those one of those stocks that you can buy and own forever as an industrial. It's one of those that I kick myself all the time for not buying when it was down into the $50. And when it was down in the 50s, everybody thought it was just left for dead, you know. And it's always been the same old company, you know, manufacturer of some of the best equipment out there and some of the best engines, quite frankly, as well. So I got Andrew Trapman, who's laugh out loud. I trade GoPro over and over again. Absolutely do it, man. As long as you can make money, make that money, Andre. That's what Lydia says. Ryan, what's your drink of choice for the Friday live feed tonight? I'm not having a cocktail with you guys. What I will do on the $10,000 7:30, I will be having a bourbon of my choice. So if you feel so inclined to enjoy a cocktail with me, your very humble channel creator, Ryan, the Independent Investor channel, I will be buying one of the finest bourbons that I enjoy as well. And that will be my drink of choice that night. But tonight I actually have some water. I have ice water, and I have some green tea. So I'll have my cocktail after the live feed when Lydia goes live, I guess, so I can sit back and relax and save my voice. So she can get a kick out of that. That's pretty cool. I insult Jeremy all the time. Yeah, no, I mean, you know, the thing about it is, like, I've got to be real. He really should be one of the guys I actually thank, to be honest with you, on my 10,000 subscriber video. Will I do that? No, I won't. I think he's probably a good guy. I don't know him. I don't know him at all. I know enough to know that he does disclose that he's a family man, and that means a lot to me. Is he a hard worker? You bet. He's a hard worker. The thing about giving investing advice, and I think I've watched Jeremy kind of evolve over the last couple of years, and I think he's actually really starting to evolve, and I hope he does. I wish everybody the best. Everybody. There's not one person on this earth that I wish ill will. I think there's enough of that in the world already, you know. So for somebody trying to do his thing and do, you know, I know a lot of people pick fun at him a little bit. I think it's all in good fun, to be honest with you. I'm actually quite critical of his channel, but business is business. And there might be some intent or some motive behind why I'm doing what I'm doing. I'm actually trying to help the guy. I really am, because I think some of his message that he provides is actually quite ill-informed. And that's the way I feel, you know? And business is business. I would debate the guy live any day, any time, no doubt about it. All in good fun, you know? I just think he's got a perspective on the stock market that seemingly works for him. I think he advocates, or at least on his last video, he talked about the importance of deploying different strategies. That came right from me. I was the one that gave him that. I got a comment on his channel. He never used to comment back to me because I was just a nobody, you know. But I offered that and said, look, man, a Coke might be good for one investor, and a Google might be good for another investor. It doesn't mean that one is wrong and one is right, you know. And it seems like all too often it's like you have to pursue this one method, and it's just something that I disagree with, you know, respectfully, and I'm entitled to my opinion. I don't even subscribe to his channel, guys. I don't. If you want to know the channels that I support through the Independent Investor channel, it's very easy to click onto my channel and see that he is not one of them. Okay. And until the message starts to turn and I get an idea that real people have the ability to hear the message, deploy the information for the greater good, I will continue not to support the channel. And it's just that simple. And I don't think he cares anyway, because the message now is turned more to what's the news of the day. And if you get 25,000 views per day on a video, Why wouldn't you pump out daily uploads every day to make that money? He's just doing what it is he's doing, and all the power to him, man. You know, I wish him all the best. It's just I won't play ball. It's that simple. So Texas Instruments is one of my faves as well. I got K97, absolutely. It's one of the top 5 performers this year, actually. Texas Instrument looks tasty right now. Obstinate One is agreeing with you. That's pretty cool. Dividends for Texas Instrument will get fatter and fatter, no doubt. I agree. K9, Bill Williams, Ryan Scribner did an excellent job on Facebook. Excellent video on Facebook. Yeah. No doubt. You guys well know he's taken and endorsed the channel from the very beginning. I believed in him from the very beginning. Was surprised at how fast the channel grew. No doubt about it. You know, Ryan's one of those guys that has got a very, very sincere approach. He's a really good guy. And one of those guys that I actually do agree with his information. I believe that people can watch the information and deploy it for the greater good. That's the same exact criteria that I apply to every one of my channels when I watch it. Can somebody watch the content and deploy what it is they're talking about and succeed from it? All right. And the answer for Ryan Scribner's content that he puts out there is an absolute yes for me. It's very simple. It's not rocket science. He just does a very, very good job of breaking down, stock analysis. He's very good at it. And he should be rewarded for that. Does a great job. Been going for about an hour and a half here, guys. I'll try to wrap it up within the next 15 minutes or so. I'm going to try to get through to most of these questions if I can. GE still has a great facets of their company. That's exactly what I'm talking about. So Obstinate One is pointing out something that not a lot of people are pointing out. And I'm just saying, now's not the time you want to be dumping the stock. No way. Okay. Learn from it. If you didn't invest in it, be glad that you didn't, because you're not down on a position. But boy, oh boy, if you didn't invest in it, and you're looking at it saying it's going to go to 0, I think it'll hit 20 before it hits 0. All right. I'll just leave it at that. Nothing in the world is indispensable. That is absolutely correct. Miss Lydia. Hopefully you just buy the best of breed, and those best of breeds can really perform for you over time. Got Mike Lowry. I bought Intel Monday and loved the ex-dividend payment, 30 cents a share. It's a good feeling. Intel is you're getting a really good entry on Intel right now, Mike. You know, sub 50, below 50, in the high 40s, I believe. I'm long Intel. I only own 100 shares of it, but it's a block of shares that I'm going to own forever. They're set up on a drip as well, so that's just kind of one segment of my technology value exposure in my portfolio. Intel holds it down there, you know, IBM being another one of those mega cap, you know, technology, the big, bad, boring stocks, you know, Microsoft as well, kind of the same idea. You know, I would throw Cisco in there as well. I don't own a big enough block in Cisco, but Cisco is right there next on the list for long-term dividend growth. And that might be another name that I would have added up in the discussion further for Rohan, who was hitting me up with the Google Amazon question. You know, Cisco, I mean, right here at $46, $47, I think it hit $48 today. Cisco is one of those long-term holds for you in your technology sector. So continue to scroll down here. I'm losing some of the I've got 59 in the group here, man. I've got 59 strong. So these are the ones that actually went through the mine, you know, when I had no sound and you were lip reading. But anyway, Roku is the #1 streaming platform. That is correct. I worked for Kmart years ago before Walmart was big. It makes you wonder how two seemingly similar companies could go in such separate directions. No doubt. It's just wild. Oh my goodness. Kmart isn't as good as Sears. Obstinate One is always holding out there for Kmart. I love it, man. Very cool. Get a couple of IQ shares at 19 and you will be rewarded in the long run. Very cool. Appreciate that offering. That's cool. I think anything you could invest in at 19 years old and just hold it forever, you'll be fine. Larry Massa, Visa. That's another technology company I am long on. And I know Lydia does hold some shares as well in Visa. I think Lydia does a pretty awesome review of her portfolio. Hopefully it's remaining the same, but that's one of the reasons I went on a kick, caught some of the content, and one of them was a portfolio review. And I just kind of went down the line, bing, 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 bing. Yep, okay, yep, I like the way you invest. That's perfect. And it's not really, you're not reinventing the wheel. You're just investing in badass companies. It's really not that hard, you know? Visa's a badass company. So is Amazon, you know? It's one of those that you can't ignore. If you choose not to invest in it, okay. But, you know, Visa's best of breed. I know a lot of people are talking about buy MasterCard. You know, okay, if you'd like to. I own Visa. The stock has performed extremely well. I don't mind being an investor in Visa. It's just awesome. So don't you think Visa has a low dividend? It does have a low dividend for a reason. I've got Christopher Blaine who's asking a very legitimate question. Keep in mind, a dividend isn't necessarily the singular reason why you want to buy a stock, okay? A lot of people are exclusively dividend investors, and that's I would say fine. I don't think it is. I think you need to be a little bit more holistic in your approach, in that, you know, some of your portfolio should hold some small cap names that don't pay a dividend at all, you know? Some of those smaller cap companies, ETF offerings, you know, you need to have some value. You need to have some growth in your portfolio. You need to have some international exposure in your portfolio. So, you know, lots of different goals out there to meet a lot of different exposure levels. And if you just get too tunnel visioned on wanting to add, you know, dividend is the greatest thing ever, you know, I'm not sure if it fits all risk profiles for all investors out there. Certainly a good chunk of your portfolio can be dividend payers. As you guys know, a lot of mine is, and that's fine. But Visa does not have a high dividend because they have such an aggressive buyback program, okay? So instead of pay the dividend, they use that money to buy back their stock, okay? Which actually makes the shares more valuable over time. Look at the performance over the last 5 years of Visa and tell me that you wouldn't want to be an investor in Visa. The dividend has nothing to do with how far Visa has accumulated in growth over the last 5 years. It's insane. I believe it's a triple digit returner. So yeah, Visa's the real deal. So now Sears is the same as Kmart, but I always liked Sears before they bought Kmart also. Check out Accenture. Yep, cool company with dividend as well. K97, thank you. Comcast has the worst customer service. That is true. That is true, man. Oh my God. I've heard this so many times. That's actually the reason why I was reluctant to buy the stock in the first place. Comcast is actually one of those that I've made pretty killer money with. And right here, they just came off a really good quarter. And, you know, sub 40, Comcast is a buy. In between 35 and 40, you like to get it closer to 35. But it's a buy, no doubt. I don't know how they stay in business. Yeah, I've heard that too. That's really kind of, that's too bad that they're taking that and doing that to that business. The market has nowhere, got PH is undervalued. Awesome. I agree. That's Parker Hannafin, I believe, if I'm not mistaken. I've got these ticker symbols rolling through my head. I've got them all memorized. So thank you, Christopher. Appreciate that. I believe it's Parker Hannafin, if I'm not mistaken. It is undervalued, and thank you for that offering. The market has nowhere to go but down right now. Hold for the long run and stock up cash for the dips ahead. Yeah, I think there's a little bit of truth to that there, Obstinate One. I think you're kind of right on the money as usual. So I think we've got 2 months of insurance time to figure out what it is you want to do. But I will be moving a little bit more defensive come the first of the year. and monitoring the landscape and kind of taking a pause after this year. This year's been very challenging to be an investor in the stock market. It's been challenging. Last year was easy. It was easy. All you had to do was invest and you made money. This year's been a little bit tougher. The market is very touchy right now. Andrew Trapman says the market's touchy. Couldn't agree more. That's very accurate. That's the way I feel right now. That's why I'm not doing squat with it. I don't want to mess around. The infamous downvoter is here among us in the chat. Yes, nice. Finally, nice to have you in the group, John. I really appreciate it. Now, I highly doubt that you would come in and admit to being the downvoter, but certainly at an hour and 34, I'm starting to lose my voice, but I'm always down for an argument if you'd like to argue at the end of this live chat. Nobody will see it anyway, except for the loyal 57 people that are in the group. So I think 10% of my effort could probably acknowledge why in fact you feel my content is so damaging to people for free. So certainly we'll scroll down to the bottom and try to check out your further abuse of the Independent Investor channel. That'd be fun. So I'd love to enjoy that. Maybe I will go get a drink, actually. No, it's okay. Honestly, everybody's entitled to their opinion. I had one individual come on the channel and actually apologize because they thought that I had an ulterior motive with my channel. And the motive that I have is to prove a point, actually. Yeah, it's proven. The efforts that I put forward are duplicated over and over and over and over and over again by the people who come back to me and say, thank you so much for providing this referral to me. I would have never found it. So there's a negative vibe in this market right now. Be leery and invest for the long term. Yeah, I mean, you can always go long the market. That's fine. I don't know if I would be going long the market right now. If you've got a lot of cash on the side, you can certainly dabble in this market right now. But I think come next year, early next year, we're probably going to get our washout, and it's going to be big. Okay. So don't get crazy. All right. If I'm telling you there's going to be a washout, the market will probably surprise and it'll probably end up going up. Okay. It's a guess. It's a coin flip at any given time as to what the stock market is going to do. Anybody who tells you otherwise is probably not been in the stock market very long. Okay. I'll just say that. All right. Being naive and thinking that the stock market is going up all the time is absurd, and it's not information that new investors need to hear at all. What they need to hear is you don't know what the stock market's going to do. Prepare accordingly. That's the best advice that you can get. All right. Please click on the like button to support the channel if you haven't done so already. I've got Ernest, my good friend in the group, who is always bringing that up toward the end of the live feed. I've got about 7 or 8 minutes, and I'm waiting. I've still got about 8% in my battery to argue with the infamous downvoter in the group. So no, I'm just kidding. I run an open community here. Anybody's welcome. I don't even care if you hate me. It's no big deal. Remember, you can hate away, but I still charge nothing for my service. It's free of charge. It's hard to argue with that. It really is. So I'm waiting for the thumbs to go up because evidently that helps my live feed. So I've had a few trickle in here, probably awaiting for the bout of the night, a 12 rounder with the thumbs down person. So no, it's I look forward to that. There they go. There they go up. That's awesome. Thanks for the support, guys. I really appreciate it. I'm glad to do it. Really looking forward to the 10,000 subscribers. We will be there. No doubt about it. The message is too strong not to use the momentum that we've started on the channel to start to steamroll it out there. I'll be the first to congratulate each and every one of you guys that have kind of stuck with the message, maybe taken and deployed some of the techniques to put some money to work for yourself. It's that simple. You might have 401ks that are sponsored by, you know, financial institutions out there, like a Vanguard, for example, or a Fidelity, right? But this is your opportunity to maybe provide yourself another pillar in your financial picture, right? That are dollars that are able to grow unobstructed. And it's a powerful, powerful thing. And we don't have enough to be able to empower ourselves on. Just think for a second, all the things are built to consume us. You want to go buy a house, okay? You take a mortgage out for $250,000, you end up paying $375,000 over the life of that, right? So many people do that in the world. And who makes the money there, right? The bank does. We go in with our investments. We do nothing but just give away the farm in everything we do, the high interest rates we pay, the credit card balances we carry. Everything is built to just consume you over time. And then you get to be 55 or 60 years old and you look back over your life and say, what in the hell happened? I did okay. I worked hard. Why didn't I have my eyes open to the fact that I was being consumed, right? And there were parasites on me my entire life, right? And that's why we're trying to cut those parasites off earlier on in life and get people to understand that if you can just take certain things, certain aspects, and put them to work for you, this is really a liberating program in that, yeah, you might not be able to pay cash for your first house, right? But at least you can take some solitude in knowing that your investment program is yours and it's yours alone. Very, very important. Very, very important. All right. Oh, the thumbs up went up, guys. I really appreciate it. I've lived paycheck to paycheck before, and I can relate to people that are struggling. Absolutely, man. And you know, the cool thing that you say that is I wouldn't have traded anything for nothing. No way. I'm still going to continue to pursue my level of success, that of which I have not received yet in life, and that's fine. That's what keeps me going. But the very fact that I came from hard work is something that makes me appreciate everything that I have, you know, day in and day out. That's very, very important to me is the appreciation piece. Very important, very important. Just means the world to me, really does. Ryan, how do you balance your growth and dividend stocks inside your Roth IRA taxable brokerage accounts? Ah, man, that's a super good question, Miss Bill. I've got Bill Williams hit me up with a really good question. I would say that it's less about a blueprint and more about building strategic blue chips over time to cover multiple sectors from discretionary staples, communications, utilities, energy, etc. So as I've built up the names over time, my goal was never to own all the sectors at the same time, okay? And I typically stuck with high value dividend stocks when I started investing. I really did. I didn't deviate very much in looking at, you know, higher growth names. And even now investing in growth, I mean, I just invested money in Amazon at the wrong time. Amazon's a growth stock. Okay. And it's one of those lessons that you have to understand. You've got to be willing to carry on even a higher level of risk tolerance by investing in growth over time. But as far as like picking a specific allocation, comparatively speaking, I wish I could tell you that there was just a game plan. I can tell you my game plan works for me in accordance with my risk tolerance. Okay. And the secret for you is to find out that happy mix, to say, you know what, I've been investing in these blue chips for a while. I've got Home Depot in my portfolio. I've got some United Technologies or some Boeing, right? I've got maybe some FedEx in my portfolio, or I've got some financials. I've got JP Morgan. I've got, Disney, and I've got a pretty good stock portfolio built up. I've got some good passive investments. Maybe I want to take a stab at a nice growth name. And you add that growth name in there, and you kind of get used to it a little bit. All right. Maybe you like Salesforce as a business. Maybe you like Adobe Systems as a business, and you want to go ahead and take a crack at some of those higher growth names to add a little bit more potential for outpacing in your portfolio. You can go ahead and do that, but there's not a magic formula that I can tell you that you have to have, exactly 30% value, 30% growth, 20%. You can use the portfolio allocators inside of the brokerage houses to kind of help you with that allocation a little bit, but it's relative and specific to each individual person. All right. So if it makes sense to you, then it's going to make sense for me. All right. But I can't certainly tell you because it makes sense to me that it has to make sense for you either. For a lot of people, growth investing doesn't make sense at all. You know, they don't want to take on that higher risk tolerance in their portfolio, and that's just their choice. You know what I mean? So let me go ahead and continue to scroll down here. Again, I offered the opportunity to go ahead and fight with the down thumber in the group, and they didn't want to take me up on it. So I'm always down for a fight. So it's fun. I'm a fighter. So I used to be a commercial fisherman, man. I'm fairly tough. So be careful with who you call out. No, just kidding. But again, I don't see them actually letting me know why, in fact, they don't appreciate my message free of charge. So I'm going to go ahead and address the ones here at the end of the live feed here, guys. Fantastic, really. Thanks a lot for coming back in the group. I do appreciate the problem with the audio. I don't know what happened, but my bad. It's been a fantastic live feed. I am going to try to wrap it up here a little bit, try to go for the extra 15 minutes since I cost you guys 15 minutes of your time, and I do value your time as much as I do mine, and I do thank you for sticking with me. I really do. Greg Gatsby says Royal Caribbean is definitely best in breed in the cruise industry. Carnival ships are party boats, and boomers don't want to go on them. That is true. I wish I could tell you what I do for a living, Greg. But if we're offline someday and I have the pleasure of meeting you someday in person, which I'd love to meet a lot of my folks in this subscriber. If this thing gets big enough, we're going to set those venues up, and it's going to be in Las Vegas for sure. But I wish we could have some of those sidebar discussions about my agreeance with you. I do like Norwegian Cruise Line. I like Royal Caribbean. I like Disney. Okay. Disney runs a fantastic cruise line, and that's what I talk about all the time with their multiple businesses, and their diversified suite of or portfolio of businesses. But Royal Caribbean is a fantastic company. They're really, really good. You're right on the money there. I agree with you. The cruise industry, if you have any idea at all what I do for a living, the cruise industry is one of those very few companies or industries that are growing exponentially. The cruise industry is going to continue to benefit from the baby boomers, who are absolutely the reason in and of itself as a standalone to invest in the cruise industry. I will tell you, I don't invest in the cruise industry right now. It's just one of those that isn't very attractive to me. I put it in the same category as airlines, to be honest with you, but probably a lot of money to be made there. And, it opens my eyes. I'm always open to evolving a little bit for sure. So, but appreciate that offering. You're right on the money. You really are. Anyone who doesn't like Ryan ought to be tarred and feathered. Yeah, I don't know. Honestly, if you start getting more and more traffic on the channel, a lot of people just don't give you a fair shake, and they tune in and it's just not for them or whatever. I can respect that, but yeah, I just I want to make everybody happy. That's just the way I am. I don't want somebody to come in and start to bag the message when they haven't given it a chance. If you give it a chance and it's not for you and you disagree with the message, I can respect that, but don't just bag on it for no reason. I have my insight on where I think that's coming from. I just have my insight, and I won't provide that to the group over a live stream, certainly. But Lydia, baby boomers are going to be cruising on Royal Caribbean in record numbers in the years to come. Yeah, I agree. Anyone playing defense with 401ks, I wouldn't do that. I think Ross and TJ Maxx should both benefit greatly from the closing of Sears and Kmart. I agree. Both of those companies are just fantastic. And that TJ Maxx would be the one retailer I would buy, honestly. I think you're great. I think they'd kill it with Sears and Kmart still around. They're a fantastic business, a niche business. Ross is the same way. I agree with you. You're right on the money with that. Actually, TJ Maxx is tops on my list as far as retailers as well. So I second that, right. It's a great channel. You're great. Brenny, Dividend and Reinvestment. That's correct. You can learn all kinds of stuff by kicking in on a 2-hour session, man, on a Friday night. You betcha. It's been really cool being with you guys. I'm going to take one last scroll through here, make sure I turned it into a complete disaster, into a very successful live stream. At least me personally, I got a lot out of this. I thank you so much. You guys are just killer, man. You guys are where the strength of the channel is. And within hopefully a month, we are going to celebrate you. We are going to celebrate you. No doubt about it. And I will make it all about you guys. No doubt about it. Doing this channel is challenging, but I love the challenge of delivering the niche message. And I think we're reaching a lot of people. We really are. And I take a lot of satisfaction in that. And if there's one little bit of payment that I do take through the channel, it's that. It's the satisfaction of knowing that we're reaching a lot of people, and I know that they appreciate it. I really do. Very cool. How old are you, if you don't mind me? Okay. I know boomers that go on Royal Caribbean regularly. Yep. 35, man. Oh my goodness. Yeah, you're a youngin'. You're younger than me. That's awesome. You always ask me what it takes in the millennial world. I'm glad I found channels like yours and Scribner's at the age of 30. Oh God, no doubt about it. You're young. I got Julio. You've been in the group for a long time, man. No doubt. Before making monumental financial mistakes. Yeah, and you're going to make mistakes. I think the idea in finding a channel like myself and Scribner, I know Scribner, he does a really, really good job of just kind of offering the fundamentals, man. That new video he did that was 50 minutes long, that was such a killer piece of content. Strategic risk, I might say, but I thought he just did it. He knocked it out of the park. I thought it was excellent. One of the best investing videos that I've seen on YouTube, and that's including my stuff. I've got a little bit more of a passion for self-directed investing, and that's fine. He knows that. And I've got a resume to back it up. But I'm glad for you, honestly, that you found the channels. No doubt about it. I've met him in person, and if I sensed any inkling of ill will, I would have walked the other way. No doubt about it. I have no problem with that. But the guy's solid. He really is. He's got a good heart. As a young guy, I don't want to say a kid, but good God, man, at 20, he's 22, 23 years old. I mean, that's extremely young to be just putting in the amount of work that he's doing, making the connections that he's making. And I don't mean to sound condescending, but I'm proud as hell of him. I really am. I like to see those success stories, because he's just one of those guys that's proving that it's possible, and I think a lot of folks see that maybe, and they think that they can do it as well. And I think that's cool too. I really do. I think it's cool. I think he's the guy with the machete chopping his way through the Amazon forest, and kind of carving a path for a lot of people. And I think a lot of people owe him a debt of gratitude for sure. And I kind of feel like the same for me as well, because I just as easily could have just shut my mouth and not said a word. But, it's a time consumption to come on and offer, my thoughts on YouTube to folks if they're willing to listen. And it's pretty cool. I've been thinking about changing my allocation within these markets. I'd like to know a little bit more about what you mean by that, Bill. Certainly hit me up and let me know kind of what you're thinking. I want you to always to err on the side of being defensive. If you're thinking about reallocating now before seasonality, I think the seasonality is going to be extremely positive for the stock market. I think coming into Thursday, Black Friday and Amazon talks and Cyber Monday, I mean, you guys have to understand, man, that all that stuff's good for Amazon. And it's good for stocks in general when we're moving into a holiday season, when we know that a tax cut is right around the corner, should be showing up in a lot of people's pockets. I think the consumer's going to surprise this holiday season here. So I'd be careful about betting against it. I'm young but wise. You are, no doubt. I meant what I said. It wouldn't be the same without you, man, in this community, honestly. I'm glad to have you in it, no doubt. I feel that way about a lot of folks in the community, that of which I've never met. So just cool to have you guys. So one, I like him as a friend. Don't make things weird. That's funny. All right, man. We're doing things other than helping people invest, man. We're helping people connect. I love it. I'll leave it at that. That's fantastic. That's great. I love it, man. Just as honest as any, I guess. That's cool. I bought AT&T today. Verizon is great, but overbought. It could be overbought at this level. AT&T is trading at a discount, honestly. Here at the low 30s, man, I think we're good. But very, very good stuff. Hey, Ryan, what should our asset allocation be as a 20-year-old? That's Brenny Feliz hitting me up. And Brenny is another one of those just awesome subscribers. I always try to get back to you as sincere as I can because you always hit me with some sincere questions. What should our asset allocation be as 20-year-olds? Okay, so as a 20-year-old, I wish somebody had told me to take and invest in the VTI or the S&P 500, which you could do as young as you are. You could do 70% in the S&P 500. You could do 20% in the small cap ETF through Vanguard. And then you could put the remaining 10% into an international fund. And that right there is the exact allocation that I run in my passive portfolio, right, wrong, or indifferent. So there you go. There's your answer. 70% S&P 500. You can go 20% with small cap ETF, which is VB. Okay. And then you can put the remaining 10% and just start 10% of your money. It doesn't have to be that much. And start that total international fund that they got on the Vanguard website as well. That's the best allocation that I can. Don't try to outsmart it and put single stock in your portfolio if you're just starting out. Let yourself become an investor by working off of those allocations to start. If you didn't want the international exposure, you don't have to. You can go ahead and do like an 80-20 if you want, or a 75-25, something like that. But you kind of see the range that I'm working in there. If you wanted to do a 75% in the S&P 500, you can do that with 25% in the small caps. You could do that, and that's going to go. You are my wingman, absolutely, no doubt about it. See, I'm doing financial planning here, and I'm pointing out the fact that you're goose. I love it. So let me cruise down here. I hope that answers your question, Brenny. That's awesome. It's a good question. 100% stock, single stock, or ETFs. So you can do either, but kind of depending on whether or not you're starting, man, do not underestimate the power of diversification in your portfolio. It's so, so important to own the entire market, because you might try to cherry pick the S&P 500, and all the stock picks that you pick out of there that you cherry pick are going to underperform the market next year, and the underperformers are going to overperform next year. That's just how it is, right? So you got to be kind of careful, man. Got to be kind of careful. All right. What about percentage in single stock? So single stock investing doesn't have to happen right away, and you don't need to look at it from a perspective of how much single stock should I own, okay? I want you to make certain thresholds in your career, okay? Before you add even one single stock to your portfolio, I'd love to see you at $10,000, $15,000, $20,000, $25,000 of passive assets built up. And then you can go ahead and have some capital built up and maybe buy a position like 10 shares of Apple, okay? You know, it doesn't have to be percentage relative to the overall portfolio. Okay, it doesn't have to be that way, but I want you to think about it a little bit more holistically and a little bit more strategically, okay? In that if you have $5,000 to invest in the stock market, make sure that you have plenty of cash, number one, relative to the condition of the market right now. You got to be careful, all right? So if you took half of that and invested it into an ETF, you only need to own the one ETF. That's it. You could buy 10 shares of the S&P 500. You're good to go. I hate to minimize it in that way, guys, but it's the best advice I can give you. And I just want to see you succeed in the stock market. It's so important. You know, 5 years down the line, you'll understand why I gave you that advice. 10 years down the line, you will really understand why I gave you that advice, you know? And what are you going to say 40 years down the line when you look back and say, wow, Ryan told me to start passively and diversified. I'm so glad I took him up on that advice because I housed those assets in a self-directed account. Every dollar that I made, even if it wasn't running up like an Nvidia or running up like a Netflix, you know, I was making solid, consistent rates of return per year. And that is the end of the day why we invest. All right. We're going after 8 to 10% appreciation, guys. We're not going for, 3 digits of appreciation every year. We're not going for that. All right. We're going for a nice, steady rate of return every year. And passive investing is what gets you that steady base. All right. Guys, I've been going for less than 2 hours. I've got 10 seconds to go. 2 hours. I'm going to cruise to the bottom here. I hit the 3,000 mark today. Awesome. Celebrating with some wine. That's awesome. 3 months in the market. Ryan, love your straightforward videos, man. Glad to deliver it for you guys. I'm going to college basketball game next Friday, and I won't be here. Thank you for the warning, because I would wonder if something was wrong with you, obstinate one. But have fun at the game. I don't blame you. Okay, I'm really not that exciting. All right, but I love your devotion to the group and the community. I thank you so much. I've got Brenny again. How would you manage the money after you are in retirement age? Would you put it in savings or reinvest it elsewhere? No, these investments are built to stand the test of time. They really are. If you had 100% passive and let's say a total market index, you could continue to allow those to grow into your 50s, 60s. And if you wanted to safeguard some of that money later on in life, remember, it's eligible for withdrawal now, right? So I would take those pieces of money off. And if it's money that you're not using to live on, you could do a couple of things. You could reduce risk by filtering it into a savings account or a fixed equities portfolio, right? And you can build up that portfolio over time, starting in your 30s or 40s or even 50s, okay? I typically like to recommend that people wait to start to get fixed equities in their portfolio. You guys know I've started with 10%, okay? I've got 10% started, and it doesn't reflect the other investments that I have. It's just that I've started this with the intention of slowly building it up over time as I enter into my 50s and enter into my 60s. It's just giving me another bucket to drop my money into, guys. And at the end of the day, this game is all about providing yourself options, not limitations. Guys, I'm going to sign off with that. 2 hours going strong. Thank you so much for tuning in, guys. I will see you again next Friday. Be well. Have a great weekend. And happy Veterans Day to everybody out there, guys. Thank you so much. I'll see you next week.